Running your first payroll can feel like a lot. All those forms, tip rules, and laws can be overwhelming. You might worry about employees not getting paid right or facing big fines, and laws are constantly changing. But the good news is you don't need an accounting degree to get started. Just follow these guidelines to handle tips, taxes, and laws for your restaurant. Let's protect your business and keep your team happy. First, build a strong paperwork foundation. Imagine you get audited and can't find any forms. That means fines and legal headaches. Every new employee needs to send you a set of documents before their first shift. You need 3 main forms for every employee. The W-4 form, which tells you how much tax to withhold, the I-9 form, which proves they're legally able to work in the US and confirms their identity, and direct deposit authorization to set up electronic payments, unless you're paying them with cash or check. If you hire independent contractors like a marketing consultant, you need W-9 forms instead. Be careful how you classify workers. Accidentally treating employees as contractors is a common mistake that can lead to big problems. We have a video coming next week about the most common payroll mistakes that restaurants make, so you can avoid them. Laws vary widely by city and state. You may also need workers' comp or state tax papers. For example, New York has its own state tax withholding form. Always check your local rules. Finally, if you offer any benefits like health insurance or a 401k, you'll need to collect forms for those as well. The IRS requires you to keep payroll records for at least 3 years. This means all employee info, time clocking data, pay stubs, and tax forms like W-4s, W-2s, 941s, 944s, etc. Keep everything organized and easy to find. Without it, you can't figure out your taxes correctly or protect your business if you get audited. Now it's time to figure out employee earnings. Payroll seems simple. Hours worked times rate of pay. But restaurants have unique challenges. Split shifts, unpaid breaks, and multiple jobs at different rates of pay. One overtime mistake can cost you thousands in fines from the Department of Labor or DOL. To start, you need accurate time tracking. Time clocks give exact punch times to prevent pay disputes and keep clear records if you're audited. Make sure your time clocking feeds directly into your payroll so you don't have to enter it manually. When you have everyone's timesheets, you can calculate their regular pay by multiplying their hourly rate by their hours worked. Then factor in overtime. The Fair Labor Standards Act, or FLSA, requires you to pay 1.5 times the normal wage for every hour worked over 40 hours in a week. It's important to note that the 40-hour rule applies per work week and not per pay period. So if somebody works 45 hours one week and 35 hours the next, you still owe them overtime for those 5 hours. In the restaurant industry, we also have split shifts, where an employee clocks out and then comes back later the same day. It's really common between lunch and dinner. Track your total hours and deduct unpaid breaks following your state laws. To complicate things, employees that work multiple jobs at different pay rates get weighted overtime. Let's say someone works as a dishwasher for 25 hours and a line cook for 20 hours. Their overtime is for the dishwasher role, but they still get 1.5 times overtime with a blended rate for both of the jobs. Luckily, restaurant payroll platforms like 7shifts can calculate multi-role overtime for you, saving you from having to do complex math. Speaking of complex math, let's talk about tips. Gratuities make restaurant pay difficult because you have to balance legislation with keeping your team happy. Mishandling tips can lead to fines, lawsuits, and IRS headaches. First, tips always belong to your employees and not to you or your managers. A Texas barbecue restaurant recently had to pay over $800,000 for including managers in the tip pool and miscalculating overtime. Some restaurants choose to let front of house staff keep all the tips that they earn, whereas others use tip outs or tip pooling to share tips between the team. You can ask employees to share tips with other staff, but in some areas, back of house rules like cooks can't participate in tip pools. And managers and supervisors can't take any pooled tips under federal law. Rules about tip pooling and service charges do vary by location, so check your specific area. Some states allow tip credits, meaning that you can pay service staff less than the minimum wage if they earn enough tips to cover the difference. The DOL defines a tipped employee as someone who regularly earns over $30 in tips every month. For example, Kim works as a server at Redding's Family Grill in Texas. It's a slow Tuesday, so she works an 8-hour shift and she only makes $35 in tips. Texas minimum wage is $7.25 and the sub-minimum wage is $2.13, meaning the maximum tip credit is $5.12. For the shift, Kim should have made $7.25 times 8 hours, so $58. With the sub-minimum wage, the restaurant pays her $2.13 an hour, plus $35 in tips equals $52.04. That means the restaurant must pay her an additional 58 minus 52.04, or an additional $5.96 for this shift. Payroll taxes and deductions include federal, state, and local taxes, Federal Insurance Contributions Act or FICA taxes, and deductions for benefits like health insurance, 401k, vision, dental, etc. Employees pay for most of their own payroll taxes, but restaurants do have to pay for some on behalf of the employee. You pay for FUTA taxes and a portion of FICA taxes. You can claim FICA tax credits on tipped income. We have a full guide on state-by-state tip credits in the description below. Let's touch briefly on payment frequency. How often you pay your team affects your money flow and how happy your employees are. Paying weekly can keep employees around longer. Razzie found that weekly payroll can boost employee retention by 26%. Paying every 2 weeks balances employee satisfaction with admin work and is the most common option in the restaurant industry. David Scott Peters actually suggests paying semi-monthly or 2 times a month, so you only have 24 pay periods in a year. Paying once a month can make it hard for employees to manage their cash. Beyond these, some systems offer instant tip payments or earned wage access, letting employees get paid daily. This can help keep your team happy and reduce turnover without putting too much financial strain on you. Should you pay out tips on payroll? It may be easier from a financial and administrative perspective to add tips to payroll. It also means employees get taxed on a regular basis rather than a lump sum during tax season. However, a lot of employees are used to getting their tips at the end of their shift rather than waiting until payday. And to be totally honest, a lot of them don't want to report their tips. Now, the proposed no tax on tips bill could change all of that, which is why it's important to choose a payroll system that stays compliant with new rules. Using the right technology is the difference between spending hours running payroll and spending minutes. You can do it manually, use a software, or hire a bookkeeper. The best option depends on your restaurant size. If you plan to grow your restaurant, doing payroll manually is risky. Every new employee, regulation, and location adds a new layer of complexity. Nearly half of restaurant operators say they're optimistic about technology lowering labor costs. When you look for a payroll software, make sure it offers not only automation and compliance tools, but restaurant-specific features as well. Find one that's easy to use for you, your managers, and your staff, like having the option to check it on your phone and letting employees update their own direct deposit info. And double check that you'll have good customer support. You don't want to mess with people's money. Just Payroll integrates time clocking, scheduling, and payroll, and automates calculations for tips, taxes, and overtime. Don't take it from us, take it from Avery Ward, the CEO of Little Italy Ristorante in Groveport, Ohio. Since switching to Just Payroll, our experience has drastically improved. The platform allows us to automate the entire payroll process with just one click. This automation has reduced our payroll processing time from over 3 hours to just a few minutes, freeing up valuable time and resources. With legislation constantly changing, you need systems that can adapt. Choose flexible payroll software that integrates with tools you already use, like your POS, scheduling, team communication, and time clocking apps. Keeping it all in one place means there's only one password to remember and one single source of truth for your employees and your managers. Now you have a clear path to run payroll confidently and without making costly mistakes. Getting these processes right saves you stress and money in the long term. If this is your first time running payroll and you want to make sure that you don't miss anything, we have a payroll implementation checklist that you can download in the description below. We covered legal paperwork, hours and overtime, pay frequency, tip management, choosing software, and the importance of record keeping and compliance. Now you know the payroll basics to pay your employees properly and run your business smoothly. Still have payroll questions? Let us know in the comments. And if you found this guide helpful, subscribe for more useful industry tips.